Welcome to Edison TV. I'm Catherine Thompson, Technology Analyst at Edison, and I'm here today with the management team of Quadient, CEO Geoffrey Godet and CFO Laurent Dupassage. Quadient designs and builds automation solutions for business communications, including customer communications management, finance automation, and mail and parcel management. Quadient is listed on Euronext Paris. Welcome, gentlemen.
Welcome, Catherine. Thank you.
Geoffrey, just to kick us off, do you think you could give us a brief overview of the business and also kind of recent changes to the leadership structure?
Of course, Catherine. So Quadient is a tech company. Today, it's provide a intelligent automation platform across different processes that we optimize. One of our first activities is obviously a digital automation platform. The second one is a mail automation platform, and the third one is a parcel locker automation platform. Quadient represents 1.1 billion revenue, roughly, across two main geographies. The North America market is our primary market today, with close to 60% of our sales in North America. Europe is our second main market, with roughly 40%. And we obviously have also some strong presence in some very unique countries in Asia, in particular in Japan, where we have a strong presence. It's a company that is 150 million in EBIT, a strong profitability, driven by the growth, both in terms of top line, but also a growth and improvement in profitability of our two growth engines, which is our digital platform and parcel locker business. The transformation of Quadient has started quite a few years ago. And naturally, we have developed the two growth engines that I mentioned, the digital automation platform and the parcel locker business, to accelerate the transformation from our traditional business on the mail side that has been slowly declining, though albeit in a predictable way in the last few years. Recently, we actually have decided to make some steps to accelerate the transformation of the company, as we are driven by some stronger market drivers, AI, invoicing mandates, digitalization, that makes us anticipate that our digital activity is going to become the first activity of the group before 2030. First activity both in terms of revenue, but also in terms of profitability. And as a result, I think it's our role as a management team, as a CEO, to anticipate the good execution and good delivery of this plan. And as a result, as recently as March, we have adapted the organization of the company, and we have brought on board 4 dedicated executives to lead our digital practice and reinforce, obviously, the executive presence at the board, which is definitely a symbol of the acceleration and the anticipation of the growth of digital activities for the coming years.
Right. And could we dig into the trends within each of the 3 divisions in a bit more detail? So if we start with the digital division, your customer communications management software is very well regarded by industry analysts. Could you tell us a bit more about the trends that you see in this business and your ambitions for this business?
Sure. So we're really benefiting from 2 major trends, 3 major trends from a digital perspective that are the underlying growth drivers for this business. The first one is the general digitalization that most businesses have to go through, from large to mid-sized companies to small companies. Everybody obviously have to transform paper-oriented process to digital automated process. So that has been going on for the last, obviously, a few decades, and it's accelerating, driven in part by 2 additional factors. The first one being intelligent automation, AI, right? That is an accelerator, helping companies to go further in that automation opportunities for them. And the second one are usually more driven by change in regulation. And you can talk about regulation in healthcare, in various regulated industries, but also in financial automation. So most European countries are going through what we call invoicing mandates, forcing companies to invoice digitally between themselves and having an invoice that is digitally sent and agreed by government platform, so that tax could be paid on time, the government's happy, and obviously the customers could benefit from structured financial information. So these are the underlying drivers, right, that make us look at small, mid-sized, and large companies that have to equip themselves with those digital automated solutions in the coming years. With an large enterprise market that is a little bit more penetrated, as large companies have large IT and investment, and they have invested already in the previous years. So we're looking at a market where we consolidate different systems and allowing those large companies to be more efficient, leveraging AI. But we're really looking at the mid-sized segment of millions of companies across Europe and the US that have not invested yet in those solutions, and they're waiting for regulation as a deadline or as a major driver for them to equip themselves. And this is where we have positioned our digital automation platform to be able to equip all those mid-sized customers. So roughly today, we have 16,000 customers already that have decided to choose Quadient digital automation platform. And obviously, our platform covers a wide range of capabilities, from being able to design and edit and create invoice or other digital documentation, different templates, and helping them to optimize the cash collection of those invoices, the payments of the invoice, the approbation of those invoices for whether or not it matched the purchase orders or the budget that they had in line with that capability. This is all what our suite is capable of handling for those customers. And we are obviously recorded nowadays, as you mentioned, by industry analysts from Gartner, Forrester, Media, and others, are usually on the top right-hand quarter, where we're the most advanced, the most penetrated, and having the most sophisticated technology, which is obviously a great appreciation from third parties.
And also within the digital division, as you've kind of alluded to, the business process automation part of the business should benefit from the kind of imminent e-invoicing mandates in France. Could you talk about how you see yourself as positioned there, and what opportunities you see for the business?
So our ambitions are great and quite high, but in line with the amazing opportunity that exists on the market. And the France is kind of a use case before we talk about the rest of Europe. So the French government has decided that by September 2026, which is tomorrow in our time frame, to force and mandate for all companies of all size to be able to register their invoice before they can send it to their counterpart with a approved and certified government platform, right? Basically defined and designed by the French government. And this platform would allow companies, before they send an invoice to their customers, to register that invoice, making sure that the granular information on the invoice is spelled out. And once the government platform is actually approving that invoice, then we have a certified invoice, and then that invoice can then be sent to the customer, and for the customer to receive that invoice the same way, and being able, before payment is authorized, to certify that they have received that invoice, right? So it's really about the e-invoicing automation process. And it's really trying to help millions of companies in France, all companies of all size, to benefit from this new regulation. So the opportunity for us as a vendor is that we're one of those certified vendors in France. And we've had already 100,000 customers, small and mid-sized and large companies in France, that are customers of Quadient, in which we're going to try to promote that solution. And as we establish ourselves with the French mandate, we're obviously looking at the same opportunity that is going to be upcoming in other European countries, with Germany starting its process in 2028, with Belgium that actually started at the beginning of 2026, and all the other European countries are going to subsequently, progressively get on board the same kind of processes. There's a European Commission standard mandate calling VIDA that is also nearing itself around 2030, for which obviously we want to be a major player and becoming an invoicing leader in Europe as a company.
It sounds like you've got a really big opportunity there. Moving on to the mail division, which you referred to as your legacy division. In a world where mail volumes are declining, if we exclude parcels, what is your strategy for this business?
So we don't call it legacy because we obviously are supporting almost 300,000 customers today. Mail still have a lot of value for a lot of companies because some of the most cost-effective and most efficient way and certified way and approved by regulation way of being able to share information. While some of it is digitizing, we just talked about before. We're serving those customers, and we're definitely being number one in Europe, being number two globally, the capacity to extract a lot of value for our business and for our customers in the coming years. The benefit with this business is it's a very predictable industry. So even though mail volume is digitalizing progressively, we also know what are the upcoming regulations that will move some of the physical mail to digital capabilities in a planned way, in an anticipated way. And we can predict, obviously, the evolution of that business for the coming decades. And we have a very recurring business model because we obviously place our automation mail equipment, which we call franking machine, folders, inserters. So it's a whole suite that really helps automate the physical delivery of putting an important document hence an invoice or a payroll or a payslip or another important business transactional information into a letter with the right information, with the right address in a certified way. And that's we obviously automate and processes. This business is declining, but albeit at a slow level of decline, around 5%, and from which we're able to extract quite a lot of values in this scaled environment with an EBITDA close to 25%. And we believe that we could maintain the high profitability of this business over the foreseeable future.
And the other third division, so the parcel lockers division, is actually well positioned because parcel volume growth continues to grow. What's your strategy for this business?
This is another fascinating business. And the same way I mentioned that we're number one in our software practice worldwide, recognized by EDC, I think, last year. It was the largest market share. And just mentioned on the mail side that we were number one in Europe, number two worldwide. We are actually also having leading position in this parcel locker business. We're actually the number one in Japan with almost more than 70% market share. We're also the number one in the US market with more than 40% market share. So that's something that is quite recurring across our performance on Quadient. When we enter market, we like to be the top provider. The parcel locker is really benefiting from the higher penetration of e-commerce in our respective countries, right? Where each one of us order more and more goods online, right? And as a result of us making that purchase online, a physical logistical delivery has to happen, because instead of buying in store, we're buying online and somebody has to deliver that goods to us at the office, at home, or wherever we are. So there is obviously an increase in those goods deliveries, in those parcels deliveries. And there is a big questions and problems that a lot of stakeholders have to optimize, which is how to deliver more and more of those parcels more efficiently in a regulated environment, in an environment that is more CO2 friendly, so we could reduce the CO2 emission associated to those deliveries, where we could deliver more goods with less drivers, with less trucks, right? So that's why we have created a parcel automation platform that really optimize the first mile and the last mile of the delivery. And it's a technological platform. We're not a carrier. We do not provide the service to deliver the package, right? We really provide that physical capability of those lockers that you may have seen everywhere in the cities, in the streets, outside, or inside the shops. And we have the full automated platform on the back end, right? The software that really is able to track and trace the order from the moment you place that order online on the website to the moment where the carriers is going to be able to, through their logistical network and their warehouses and their truck and the drivers, to be able to take that package and deliver it to you within sometimes just a few hours, right? So we have that middle backend that is integrated with our lockers. We've got 28,000 of those installations worldwide today, and we intend to double the size of those installations in the coming 5 years, and trying to retain our leadership position in the US and in Asia and in Japan in particular, but also to penetrate specific European market, like the French market, the UK market, or Italy, which we have recently launched.
Great, thank you. I'm going to shift over to Laurent now and just ask you about the financial side of things. So you've set guidance for both the short term and the medium term on a divisional basis. Could you talk us through what the targets are that you've set?
Sure. So in the short term, I mean, we mentioned this year revenue growth, organic revenue growth expected between -2% and +2%. The EBITDA targets have been reminded for each solution during our Q1. I mean, above 20% in digital, above 25% in mail, and above 10% in locker for the year 2026. Now, over the midterm, we expect by 2030 revenue at around 550 million euro for digital. That was brought up after our full year publication, which is above and beyond the 500 million euro we expect for mail and above 200 million euro we expect for locker. Respective EBITDA on this midterm guidance of 2030 is about 30% in digital. That would be the most contributive and the highest EBITDA of Quadient. Between 20 and 25% in mail and about 20% in lockers.
Right, thank you. Over the last 3 years or so, you've made a few acquisitions. Could you talk us through your capital allocation strategy and also your views on M&A?
So in the past years, you're right, we've been opportunistically adding capabilities to our platform, notably on the digital side with the acquisition of Delight in 2023, and last year Serendia, and CDP. We also nicely consolidated the lockers business in the US with the acquisition of Packet Concierge back in December 2024. We also consolidated the mail business in Europe with the acquisition of Froma early 2024. That being said, the trajectories I just mentioned are organic and do not require subsequent acquisitions. And back to your question, from a capital allocation standpoint, the priorities remain in organic growth and CapEx, with a 300 million euro envelope over the 24 to 26 period, opportunistic bolt-on acquisitions, but maintaining healthy balance sheet with a leverage excluding leasing at 1.5 target by 2030, and the return to shareholders of 20% minimum in dividend. As an example, this year, 46% of return is submitted to the AGM validation.
Great. Thank you. And finally, what are the events that investors should look out for in both the short and medium term to kind of evidence that you're executing your strategy?
So during our Q1 publication, I think we need to flag two, I think, important items. The first one was the acceleration we had on the ARR, which is obviously the metrics that we would look at on the digital side, which basically reflects the level of contracts that are signed and live, and that will generate future revenue. And I think this is a metric that we'll need to continue following and to see how this improvement, this increase, this acceleration is coming up together, notably in light with the invoicing mandate coming up in many countries in Europe. I think that's really something investors need to look at. The second part, I would say, would be the quality of the management of the mail business, notably the fact that in Q1, again, we did significantly reduce the decline of that business. And we expect this year, as mentioned earlier, more than 25% EBITDA on that business, meaning we need to continue controlling, as we did in the past, strongly the level of profitability and cash flow we're getting from that. Last but not least, lockers utilization rate that we publish on the open network in Europe, but also the ability to progress in the margin side are going to be key in the coming quarters and years.
Great. Thank you both for taking the time to speak to me. It sounds like you've got lots of growth opportunities there. So thanks again.
Thank you, Catherine.
Thank you, Catherine.